Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Salesforce.com, or Salesforce, which is announcing earnings later this week on May 27th. This is following up one of my other earnings preview with NVIDIA, which was released yesterday. If you want to check that out, both NVIDIA and Salesforce are two of my stocks that I quoted at the beginning of 2021 as what I wanted to hold for this entire year. Now, Salesforce is not seeing the same type of run back up all the way to new highs that we've seen from some of the other high growth stocks. For that reason, I still think that they have the capability to definitely make a run. For those of you who are new to the channel, please consider liking and subscribing. I do a lot of stock reviews, and we have a lot of fun in the Discord, which is in the description down below. So for Salesforce, this is a company that does customer resource management for its clients, which is why it picked up the ticker symbol CRM. One of the things that I really like about Salesforce is that this is a company that, despite their scale, they have continued to grow at an incredible rate over the course of the past few years. We can actually look at that in the valuation here on tdameritrade.com when we look at their growth rates. Currently, when we look at the revenue growth on a trailing 12 months basis, they are currently growing at 24.3%. Now, this is on an annual basis or over the past 12 months. The reason that I want to highlight this is because over the past 7 years, Salesforce has highlighted on average 30% growth over the past 7 years. The reason why that's so important when we talk about revenue is because this is a company that last year, when we look at their total revenue brought in $21.2 billion. The reason why that's so important is because, as you can see from a growth rate perspective here, the company has probably, what we'll see, tripled in revenue as of when we look at the Q1 earnings that are expected to come out this week. The reason that they've been able to do that is through a combination of very strong organic growth, but also incredibly active M&A activity. They've also, on the sidelines and not really talked about as much on the Wall Street, is they have done very, very well being an early investor in a lot of smaller tech companies that have gone on to go out and sell. One of the key examples of that would be nCino, ticker symbol NCNO, which went public in the best fintech IPO since 2000, and they did that last October. And Salesforce was a key stakeholder in that company, and they did very, very well as a result of that IPO. So let's talk about why this company is one of my favorites and how I think that they're going to have another earnings beat this year and continue to do very, very well. So the expectation for what we're looking at for Q1 is going to be that 89 cents that you see here on the screen. So what does that mean? What are we looking for as they announce these earnings? So some of the key things that we're going to be watching for include how successful they've been into integrating Slack into their platform in terms of when do they expect that increased profitability to begin hitting their line and how they anticipate that to grow. One of the key things that Salesforce has done is they have been able to integrate with so many other different software platforms, and software companies are looking how they can integrate into Salesforce because it is effectively a way for companies to go out and improve their sales. As someone who uses Salesforce on a daily basis, I love the software, love the tool, because I get so much enjoyment out of utilizing the tool is one of the reasons why I initially became an investor in the company. I genuinely believe that it's helpful. I genuinely believe that the staff there does a great job of continuously improving the product as well. So when we look at can they beat earnings, Q1 historically has been one of the weaker quarters, so we need to see, are they expecting to do very, very well here? If they have another beat here, I think that it puts the highs back in play. Now, this is a company, when they were added to the Dow Jones Industrial Index, they actually skyrocketed higher. If we look at that on the 1-year chart, you'll be able to see that they actually crested 280 back in September of last year. Now, this is not only when tech was already doing very, very well, but this is the point in time that the company not only had earnings here, but they also were added to the Dow Jones Industrial Index, one of the reasons why they were able to skyrocket so high. And then we had that sell-off back last year, as well as the March tech sell-off, and they've still struggled to break out from these levels. From an option strategy, I really like Leap's perspective for someone like Salesforce because they have the capability to continuously grow, or B, just hold the shares because I have a lot of faith in their CEO, Marc Benioff, who is a disciple of Larry Ellison, who was huge for Oracle and one of the world's richest men. So I love Marc Benioff. For that reason, I really like Salesforce as well. So a lot of good. The cons is not so much the individual company itself, although definitely the Slack acquisition last year is something that is to be concerned about, but rather can they match up to their fundament or their valuation associated with the company. Just to showcase what we're looking at, this is a company that when we look at total assets, they've got total assets of right at $66 billion compared to total liabilities of $24 billion. So when we talk about their debt capabilities, it's actually quite low. You can actually see that in the overall valuation when we look at the financial strength, where they actually have a total debt to total capital ratio of 6%, which is significantly lower than the broader industry. This is one of the reasons why they've been able to be very aggressive when it comes to going out and making acquisitions. The other things that I want to highlight, as we previously talked about, is the overall growth rate. They continue to do very, very well in this category. The reason that they do that is because look at their profitability. This is one of the things that is absolutely insane about the company. The gross profit margin is nearly 75%. For every dollar that comes in, only 24.5 cents is not profit, and that is absolutely insane. The reason I highlight this is because a lot of the money between here to the net profit is getting shoveled back into R&D, getting shoveled into a lot of other M&A capabilities or opportunities, because this is a company that is looking to grow. Now, I want you to point to me another company that is more than $20 billion in revenue that is operating under those type of margins, because I can't find one. It's absolutely insane. This is a company that's currently, from a gross profit perspective, more profitable than Apple, Microsoft, and Google. So it's absolutely insane. The company is just doing incredibly well. So why am I worried about the potential valuations? Really, it's just the price to earnings ratio. You can see right here, they're hovering north of a 50, which is basically in line with the broader industry. But this is a company that if we were to see a tech pullback, they definitely would have the capability to feel that and take that on the chin. But I'm not as concerned about Salesforce because their price to sales ratio is so much lower than the broader industry. And this is inclusive of other big shots in the industry, such as the semiconductor stocks, such as other tech stocks, such as Facebook, Microsoft, and Google. So for that reason, I'm not as concerned. We just need to see, are they going to continue butting heads with companies such as Microsoft or Google when we talk about the who owns the workplace, who is utilizing it, and is their software going to continue to be able to dominate that industry? So in terms of, are they doing what they need to do? I think so. I'm a big proponent of Salesforce again as in the company space, but I also want to highlight that this is a company where people continue to buy back into the company and they continue to do very, very well. Just to talk about some of the insider transactions on this company before we kind of log off, I do want to highlight that the company has had just as many people that are buying in as those selling out. Now, that's not to say that the company hasn't had their fair share of sales over the course of the past year, but you also see a lot of buying, which for a company this size, that looks very, very well on the overall company. So this is a company that continues to dominate in terms of sales growth. They have a great product, solid investments, and they're looking to expand into additional markets. For this reason, I'm still buying into this company. I like them a lot. This is a company that earlier this year we were talking about buying them at $200 a share. I think when we look at the chart, I think that we see $260 a share by the end of the year again, if not before that. Now, this is a company, if they announce very strong earnings again, I think that puts $260 in play. So we're going to be watching it. This is all just my speculation, of course, because I'm some guy on YouTube and definitely not a financial advisor. But there's a lot to like about the company, and I think that their earnings last time were still strong, and we were just in the midst of another tech sell-off. So for that reason, I really like Salesforce, I like the company, and I like this stock. So if you find this content helpful, please leave a like and subscribe, and let me know in the comments down below your thoughts. Thanks. Talk to you later. Bye.